KDKR, Decatur, Dallas, Fort Worth, KYJC, Commerce, and KMWC, Bethany. Portions of KDKR programming do not necessarily reflect the views of this station, its management, or staff.
Prudent Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, is it a global market route? Today we're going to take a look. Stay tuned for Prudent Money. Good afternoon, this is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. Listen, if you got a question for me, I want to invite you to go to the website at www.prudentmoney.com. While you are at the website, there's a place that you can go and a link that you can go to and ask questions. You can send those questions to me, and we'll get you taken care of. It's there as a resource, and it's there for your use and for you to get any of your questions answered. I think that's one of the biggest problems. We talk about it quite a bit, is that there's just really no trusted resources you can go to and just ask questions. Sure, everybody's got questions, especially after today, and we're gonna talk through some of that and clear up some confusion. But in the meantime, if you've got a question for me, you can send it in through the website, and you can also, if you need more than what an email can do, maybe you need 15, 20 minutes on a phone call, just go to my calendar and take an available time and schedule it, and we'll get you squared away. It's all at prudentmoney.com and available for your use. Okay, let's talk a little bit about what happened today and what's been happening over the past week or so. So, I guess this was yesterday, my oldest son, who's 22, I believe, 21 or 22, and he comes into the living area downstairs and says, "Hey, tell me about what happened with the stock market crash." Now, this was about last week. I said, "Stock market crash? There was no stock market crash." I said, "Where'd you get that information from?" And he goes, "TikTok." That answered that for me real quick. And then today, I'm just kind of going through the news, going through different articles, seeing what people are writing about, what's on the minds of journalists, and I come across the Wall Street Journal, which I go to every once in a while for material and content. And the question of the article was, is this 1987 again? And that took me back a little bit, because what it represents to me is that investors are grossly overreacting. Now, you know me, I'm pretty bearish or negative on the market, and have been for a while. Even myself, I'm not ready to declare what's going on right now, a 1987 crash. You may or you may not be familiar with it. I believe it was Monday, October the 19th, 1987. Where the market in one day dropped a little over 20%. And it was the first major crash since 1929, when the market dropped at the top of the bull market, which was roughly September 1929. I can't remember the date. September 29th, I believe, 1929. And the market dropped over about 2 months, dropped 45-50%. Just like that. Then rebounded over the next 5 or 6 months. Ended up dropping, it was the Dow Jones Industrial Average, dropping 86%. Now, can you imagine 86%? But back to the 1987, I was at Baylor University at the time, and I happened to be in a stock market class. In this class, because the professor was probably an employed stockbroker at the time, which he was, the class started at 6 o'clock, so the teacher, the stockbroker, could be there after work. And I'll never forget sitting in this classroom waiting, because it was the same day the market crashed. And this guy walked in, and he looked as if he'd been through a war. And so anyway, we got a full account from a broker standpoint of what happened. That, and I remember that happening during the day. I remember watching some of it, some of the news coverage of it. That was a pretty horrific day. And yet there was a journalist, and I would call the Wall Street Journal a credible news source, writing about, is this 1987 again? Fortunately, he came to the conclusion by the end of the article that it wasn't. Then I came across another article that says, stock market fall makes investors wonder when it will bottom. And we've only dropped, let's just talk about the S&P 500, 8.5% since the very top of the market, which I believe was in the last couple of weeks. That is nothing to, that's the way market goes. They get to a situation where they get real overvalued, real out of balance, and they go through a decline period. And then there was an article about circuit breakers. Will circuit breakers kick in? A level 1 circuit breaker, and this is when the market halts for a certain period of time, but a level 1 circuit breaker is when a 7% drop occurs and they shut the market down. A level 2 is when there's a 13% drop and they take a pause, or when there's a 20% drop. Well, if there's if we're using the S&P as an example, if the S&P reaches a level 1 or level 2 circuit breaker, trading is paused for 15 minutes. And if I recall, I think that I remember that happening during the crash, the COVID crash. I'm almost positive. I know that there was, in fact, there was the 7% and the 13%. There was those particular drops. There wasn't a 20%, because when it's 20% drop, they halt trading for the rest of the day. But there's just a lot of overreaction that is occurring. And of course, it doesn't help when the media is feeding it. And everything is very overly dramatic. The realization is that if you are an investor, you got to realize that 10 to 20% drops in the market are going to happen. So I would suggest that if you cannot handle anywhere from a 15 to 20% drop in stocks at any given time, then you need to check your risk level and maybe reduce it if that's something that you can't handle. Now, a lot of this is that we've had one of those markets, probably one of the easiest times to be in the market over the past, minus 2022 probably wasn't, but from October 2022 and on was an easy time to be in the market. It just went up. They went up, and there was very few times where the market even dropped 5%. It just went up, and it made investing look easy. So what ends up happening is anytime there is any kind of a drop, any kind of a decline, people overreact because we haven't had these normal declines along the way. And you get to that point where it's well, everything is great with the market. There's just no way to lose, easy to make money. If you're not making 20, 25%, you're not happy, that kind of thing. I'll never forget in 1999, right in the middle of the tech bubble, and I went to see a client, and he had made something like 27% year to date, and he wasn't happy with it. I couldn't figure that out. But anyway, it's all about keeping things in a perspective. Now, there's 4 different types of declines. I think this is important for you to know. There's what's called a pullback, and that is pretty much a 5% or less decline in the market. Then there is a correction, which is typically 10% to 20%. Now, after seeing some various declines we've seen over the past, since 2009, I would actually expand the word correction from a 10 to 20% to a 10 to 30%. But that's just me. Then there is a market crash. And a market crash is not to be confused with a bear market by any stretch. A market crash is just that. It's an enormous drop. And I believe that the COVID crash was about a 38% drop in the market over a very small time period. We'll get back to this in just a second. This is Bob Brooks. Stick around. I'm up against a break. We'll be right back. Hello, this is Bob Brooks. Proverbs 22:3 and Proverbs 27:12 are the exact same verse word for word. I call them the stewardship verses of risk. A prudent person foresees danger and takes precautions. The simpleton goes blindly on and suffers the consequences. On the Prudent Money Radio Show, we teach about risk, how to identify it, how to figure it out, and what to do about it. We believe that to be a prudent steward, you have to be a good risk manager. Listen to the Prudent Money Radio Show on Bible School Radio 91.3. Prudent Money, home of the modern-day steward movement.
Dynamic, practical, life-changing.
There's no point in going to church and not letting the Christ who gave birth to the church on the day of Pentecost change your life.
Join us each day as Pastor Paul Shepherd applies the timeless truth of Scripture to everyday life. It's Destined for Victory on this great station.
Weekday afternoons at 3:30 here on Bible School Radio, KDKR.
In 1 Corinthians, Paul reminds us to run the race of life to win the prize. Join me, Dr. Erwin Lutzer, for Running to Win. Be strengthened to finish your race with confidence.
Weekday mornings at 8 o'clock here on KDKR.
Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thanks so much for joining me today. You know I do appreciate it. Listen, if you got a question for me, go to the website at prudentmoney.com. Send it in. I will get you taken care of. That is all at the website, www.prudentmoney.com. We're talking about the different types of declines: a pullback, 5% or less, a correction, 10. We'll just keep with the same old accepted definitions, 10 to 20%, which that's what I believe we're experiencing right now as a correction, and I think that it will go at least to 20%. And then you should start to get some positive headway towards the elections. That is something that has happened more often than not right before elections. Then there's a market crash, and that is an all-out drop. And COVID, I think, is once again is the best example of that. That took about 45 days of a drop, and then rebounded and I think rebounded the entire drop throughout that year. And then there's a bear market. Now, the like I said, the crashes and the corrections, the crashes usually come back right away. But of course, you never know at the time. The pullback and the corrections are not that big of a deal. Bear markets are a big deal because it's when you get over a 20% loss and it keeps going down and down and down. It will recover, then it will go down, and it will go down further. Then it will recover, and it goes down and down further. And typically, you're looking at least in today's time, a 50 to 55% loss. It's pretty brutal. And those generally, they change the landscape of the markets. The last one that we had was 2007 to 2009. No, it wasn't in 2020. Even though the market lost over 20% in what turns out to be 2022, the market did lose over 20%. I think 28% was the total amount lost. But it lasted for 10 months. It doesn't, in my opinion, fit what a bear market would be. And that's a whole nother discussion for another time. But we're down about 8% and probably, like I said, have anywhere from a total of 20 to 25% to go. But here's the thing that's important to know. And let me say my two things before I talk about it. The first thing is, this is not anything about taking a political stance. This has nothing to do with supporting any political figure or anything like that. I'm just talking about observation. It's always good to know, to get an idea of why Wall Street thinks the market is falling. And there's the old standard reasons why the market's falling. The economic indicators. In fact, this is the pretty much the main one, is that economic indicators have come back and they're lower, and unemployment's bad, and just on and on. And this was towards the end of last week when a lot of these economic indicators came on. So the conclusion was, we're heading for a recession. And although I wouldn't disagree that a recession is in the future, of course it's always in the future, they're natural cycles that happen in markets, but it's a situation where the economic indicators that came out were really not that bad. Yeah, they were lower, but they weren't that bad, and they certainly didn't warrant a dramatic decline in the market by any stretch. So that's the first kind of red flag. Second thing that was attributed to this market drop is the what's happening in the Middle East. That has never bothered the markets before. I don't know why it would be bothering the markets this time. The third thing is earnings reports that came out from the big tech stocks. That can definitely, what's interesting is sometimes the market reacts negatively to that, sometimes the market doesn't. Market is reacted a little negatively to that. But typically what ends up happening is the market reacts to something that none of us see coming. We can sit here and talk about why the market's falling all day long, but the real reason that the smart money traders, and they actually have this classified into people who would be smart money and people who would be dumb money. That's just what they say. And they typically say that the smart money always makes money, the dumb money always loses money. In fact, at the times to get out of the market, they're saying that the smart people sell to the dumb people. Anyway, that's what they say. But your smart traders are selling and getting out for something that they're seeing as an underlying problem. And here's where this is no political stance by any stretch. But I gotta wonder, and generally speaking, the real reason is never really talked about. But I gotta wonder if there is some concern, and there should be, if there's some concern that Kamala Harris is going to become president. Because I think Republicans are a little bit shocked that the polls are so close. I mean, there's a lot of things to look at and wonder about. And it's real, even though it's 90-something days, it's real early in the process. But just something, throwing it out there, keep it on your radar. If she has a good convention and people think she's had a good convention, does the market go down? In fact, Donald Trump Jr., during the break, I happened to flip through Twitter or X, whatever you want to call it. And he called today's drop in the stock market the Kamala crash. Anyway, it could be a number of things, but the bottom line is know your risk level and be careful how you invest and make sure that when you make decisions, that you do it not filtered through emotion. So the question is, bond yields, bond interest rates have dramatically fallen. And the question is, and we've talked about this in the past, about bonds. When is a good time to buy bonds? I mean, bonds have been a horrible place to be over the past 2 or 3 years. And is this where the bond market is bottomed out? And is this where you should be buying bonds? Well, if you look at, and we base this on the Treasury bond, that's not as important for you to know. Just to call it the interest rate market. Interest rates have only fallen 24% thus far. And in a true bear market, which bonds are in, I would expect them to fall a lot further. So I don't think, and remember, if interest rates go up, bond prices go down. So all that to say, I'm not so sure that it's the right time to get into to bonds quite yet. And like I've told you in the past, I'll always keep you posted on what I think. Now, here's an interesting thing, is that, as you know, when interest rates fall, they also affect the mortgage markets. And so this was as of today. I may be a little bit off on this number, but you'll get the picture. The average mortgage rate now is 6.75% on a 30-year note. And of course, you got to be really careful about if you're in the market to refinance your home, because a lot of times people are sitting with upper 7 percentile mortgage rates, or maybe even more than 8. And they're looking for that time to go in and refinance. Make sure that you're getting a straight average and not one with points where you're paying for a lower rate. I think you want to be real careful about that, because you could see a situation where rates fall even further. And anyway, just be careful about that. You know what you're getting. Hey, this is Bob Brooks. If you got a question for me, please go to the website at prudentmoney.com and send it in, because we are all out of time. Till we do meet again next time, keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.